Hello again, everyone. Welcome. I'm gonna have to minimize this, and I'm gonna check on my phone again because I couldn't find the freaking cable yesterday. So we'll try again today. But let me see here before we get this thing fully started. What I want to do today is similar to yesterday, right? We'll go through a better understanding of distribution theory, take a look at some of this order flow stuff, specifically the DOM, and what some of my thoughts were, right? We have a little long trade going on here on some micros. We got 4 left on this from that O5. And I'll speak a bit about what had transpired there and why, right? I have 2 trades on the day, one long from pretty much the open at that 08, 09, and then now this little long from this 05. So let me just take a look at what I can see here. Milad, what's up? Thank you for joining me today. So what I wanted to break down realistically is more of what we had yesterday in terms of these distributions and these blocks that are presented by volume profiles and distribution theory alike. So what we have in this scenario, right, today and yesterday, we have to understand the context of the market and how these things shape up. Because I think this is generally overall very important for us to get context based on volume, right? That's the most important part realistically. When we have volume that dictates price movement, we can get a better understanding of direction and confidence in that direction in the markets. So this distribution block chart, very, very important to me because we understand where we sit based on our key distributions. We have a very important distribution that sits over here, that the top band is at that 90 on the S&P 500 futures into these 90s. So what happens on the overnight session is that we get this leg above that band. And when we get a leg above a distribution, what happens is that price would continue that motion, right? So when we escape a distribution, price accepts into the, I guess, imbalanced area that's outside of that distribution and would continue the trend in that motion. So what happens in this case is that we exit the top band of the distribution, which is this 90. You can see it's like a belly here on the chart. When we exit that to the upside, like about 10, 15 handles, what happens is that price accepts to the bullish momentum. There's a lot of buyers that allow price to break through that ledge, and that continuation is expected for price to go up, meaning that I had a bullish bias on today. These colors here, the blue and green color, that indicate that there's a lot of volume that happened in that area that allowed prices to shoot up. So what happens is if you can accept into the next distribution higher, once you pass through this imbalanced area, you're going to see the continuation of the upside. So dips were things that I was looking to eat up today. I was looking for those longs as long as we held around that 08 area on the bid. So what's up, Tom Gunn? Let me know if you do have any questions about this distribution theory, but the fact that we open outside of a distribution to the upside is suggestive that we have bullish momentum on the day, on the trend, and I'm looking to pick up pullbacks realistically for that long side, right? What happened here? I want to see is this thing freeze? Let me know, am I frozen? No, I think it's unfrozen. So anyways, looking for some of that upside, and where are areas that we can buy pullbacks into. Now, what happened here is right into the open, we have a lot of volume at that high that's accepting into the band to the upside, so 4808. You can see where the ledge kind of drops off on this volume profile here on my screen on my mouse. So above that, right, volume gets thick, meaning that I'm going to be looking for pullbacks. What does that mean? If I look over at this, the depth of market here, right, especially on the pullbacks that we most recently saw, Delta is one of the main readings that I like to see to give me confidence that there are buyers or sellers, right? Whatever I'm looking for. So in this case, on the S&P 500, what I'm looking for is delta, which is the market buyers minus market sellers, right, that have entered the market. So it's an imbalance. If I'm looking at delta readings that are over 1,000 in that case, right, that helps me identify that there are very strong imbalanced net buyers. Now, you can see down here around these 08s, 07s, there's clusters of multiple levels of 1,000 plus delta, which gives me the confidence that this is an area where there should be expected holds on that buy side. Now, you can take it a step further, obviously, when we read how the DOM actually shapes up, right, where there's bids and offers. So it's something that, let's see if we can find here a little more. I see there's some questions. Let me just go through some of these. Volume concentration at the top of the dip candle indicates higher momentum. Are there any indicators to point that it's losing ground like it did? The concentration at the top of JC. I'm trying to figure out what this question, what you're referring to. What scenario and what candle specifically, JC? What time frame is the volume profile on the right? It's a 50-day cumulative profile. The larger gray profile that I use on the right. But if I'm looking at this DOM, right, one of the main things that helps me, right, you get these ledges that I get from these larger profiles. That's great. I can identify where heavy volume sits as well based on like green and blue coloring on the individual session profiles. But I can add another element to qualification in that sense, right? One of the other elements is delta. When delta accumulates, right, and they're actually holding, if there's a lot of positive net delta at a region and buyers keep eating that dip and they keep bouncing and holding that bid, they're actually strong buyers at that area that help me out. You can see the concentration of all this positive delta that sits at this 07. For me, around that area is a pretty no-brainer alone. I add into the mix some bids based on the depth of market. You can find a good opportunity to get long, right? So if I'm looking at this, what happened down here at 04, you have 340, 150 sellers that sell into this low, and then 250, 300 buyers come in, and they pop prices up aggressively. When they start moving past the positive delta with these larger figures, right, you're expecting to see that continuation to the upside. Right now, if I'm reading this step by step, we have a large delta block at 12 and at 10 that we bypass through to the upside, so multiple thousand lots there. And what's going on right now, you can see markets, right, they're bidding 200 going market buy, right? There's decent market buys holding this thing up. It's a very slow market right now, though. This thing is barely going anywhere, but as long as they keep going market buy with large numbers that help push prices, just like upticks here and there, that gives me the confidence that the upside should hold, and we can see that continuation going forth. The largest dip on the screen. And I need a little more information on that. What does delta refer to exactly? Delta, right, is the difference between market buyers and market sellers, so contracts. So if someone goes market buy 2,000 lots and someone goes market sell 1,000, the delta is going to be positive 1,000, right? Someone goes market buy 2,000, someone goes market sell 1,000, positive delta 1,000. Someone goes market sell 2,000, someone goes market buy 1,000, right? Then the net delta is going to be negative 1,000 in that case, because there's going to be more sellers than buyers. So that delta, right, when you have very large imbalances in the thousands, right, 1,000, 1,300, 14, 1,500, those are large imbalances that I deem important, because they can they sway and dictate prices. So when you have large clusters of positive delta at a bottom, right, and prices holding, bouncing from that area on a constant bid, that delta refers to strong-handed buyers that have entered an imbalanced area at that point and are allowing prices to actually sustain at a key support. So if I have a key support based on a distribution block and I see a clustering of positive deltas, as is the case right now into this 0708, I'm very happy about that because that adds validity and solidifies the support as an area for me to look for those longs realistically. So if I have very large positive delta that's clustered at a top and prices can't break up, and it's like 1,000, 2,000, 3,000 positive delta at this high, and they keep buying into it, they fail, they buy into it, they fail. That's what I call weak-handed buying, and you're getting stuck longs in that case where you'd expect a larger market reversal, right? So delta helps me solidify my levels. Oops, and it, geez, my neck. And it helps me find areas to get in. And then the when moment is mainly driven by the interior columns of the depth of market here that we have in the middle. So I'm still long from '05, up about 10 handles or so on the rest of these lots. You can see as well, right now on the DOM, you're starting to create a cluster of positive deltas that are starting to increase, suggesting you can see here 300, 350, 360 go in market buy. Now we have 1,000 delta at this area. They're adding into this passive limit, right? So what that does is if we can get a nice little bid, this thing has a good potential for a run higher realistically. If they keep buying into this high, they're going to have to react on the upside, right, to clean up some of this movement to the upside with all these lots. And the fact that they keep throwing in these passive orders is helping the buy side momentum kind of keep track of this. So I still like the longs. One second. This is what live trading's about. Boring. You get in a position as long as they can keep bidding. I don't see any reason to do anything else. Oh, you might not be able to see his price. If you look at this DOM, right, this is what I was referring to. You have a nice cluster of positive delta here. And as long as we can show bids, right, multiple hundred lots continuously buying into this current high, they're probably going to continue the extension, which is why I like this long. And you can see this interestingly enough because they're throwing in a lot of orders here passively on the bid side. But if they keep getting absorbed, these guys go market sell. And if there are large quantities that continue to go market sell, right, it's not necessarily good for these longs. The footprint. Yeah, I like the footprint a lot, but for mainly delta, right, I don't really look at the numbers within the footprint too much. Because I get those figures from the DOM. Now, speaking of the DOM, look what's going on right now. They're throwing passively orders on the bid here, right? Large orders. When they get filled, these become market sells. They keep throwing these at prices and they keep absorbing and going market sell, which is not necessarily something I'm a big fan of realistically if I'm going to continue long. So I can just like pull one off like this, right? And have 3 left. Because into this 15, what's happening right now is, yeah, there are some buyers that are constantly trying to hold this, but the fact that they keep throwing large sellers on the DOM pretty much at market, right? They put them in the limit and then they absorb them quickly, right? When they put them on the limit side, they absorb them quickly, right? Go market sell, and they keep adding into them, adding into them, adding into them, and the buyers right here, you have positive 1,000 delta, they're getting a little trapped. These sellers can look to take some control of this current level right here, which is a reason for me to take at least one off and see if the rest can run. But you start seeing larger size on the sell side here, right? 370 comes in on the offer at 14.25, down ticking a bit. It's not looking, I don't love this if I'm fully long, right? If I have full size long on this, I gotta taper some off because these guys, they look a little mischievous here. Talk a bit more about volume profile per each bar. How do we know? Well, so that's the thing, right? There's no I it's not what's it called? There's no volume profile per bar. It's like just a general volume profile per bar, right? These are 10 tick candles, so maybe if you're referring to the footprint, market reversals, right? Generally, they happen when traders get stuck and there's a reaction on the other side. So, for example, right now in this case, you're starting to see a lot of buyers accumulating here, but these buyers are no longer going up, right? So if these buyers can't go up, what happens is they give the chance for sellers into these 14s, 15s to come in. If there's a market sell and someone, I haven't seen it yet, but if someone reacts, and let's say on the DOM, larger orders on the S&P 500 are considered like 200-300 plus that go market. So if someone offloads and dumps like 300 market short into 14 and it drops like a point very aggressively, that's when you start to see that there's a reactive trader coming in that could cause a reversal, right? So I generally find reversal areas based on volume profiles, ledges, and thick volume. And then the depth of market helps a lot, right? When you see the best case for a reversal is what happened yesterday into the close, right? Well, what happened yesterday, that we were doing this live, right? We did this live with you guys, yesterday's massive reversal. And what happened down there, right, over here at this 56 is very similar to what I'm explaining here. There's a lot of sellers that come in at market, right? And what happened down into that low, right, is the case that a lot of resting orders here, passive orders, were getting thrown in on the offer. And when they go market buy. So they kept absorbing them. And at one point, right, there was a lot of traders that got trapped into the lows, and these guys kept going market buy, right? This blue area right here was flashing 400, 400, 300, 300 continuously. And when they shot back up above that area, a passive bid steps in. When a passive bid steps in like this and price can't fill it, it starts chasing away from it. That suggests that there's an upside momentum move. So in this case, if I'm looking for a reversal, there's a shape up that's, so if you want to see that real time, watch yesterday's live that I did about this. But if I'm looking for a reversal, right, I'm interested in what's happening around this 15 here on the depth of market, because it's very interesting. They keep throwing in larger orders on the limit side, on the bid, right, that get absorbed as market sellers. And when they get larger quantities and they downtick a little more aggressively, you're going to start to see the reversal there because they're getting a little trapped here. Big passive orders step down to 16, right, which are pushing prices away. And you're getting a lot of positive delta of buyers that are getting trapped into this high. If someone sells, if someone goes at market right now, 300-400 on the sell side, dumps it about a handle, I think this is what sparks a reversal at this point. The center columns of the DOM that you call last traded quantity, is that the same as recent bid and ask volume? It's a good question. Let me see. Yeah, on Sierra charts, it's the recent bid volume, recent ask volume. Those are the middle columns of the market orders, exactly. Just trying to get download volume profile. The volume profile guide and cheat code, honestly, I wouldn't. It's not that important realistically. I would say if you go to our Discord, um, if you go into free resources on our free Discord, we have like the I think it's pinned. I don't know the last thing that was mentioned. Go through these videos. You'll get a very, very good understanding of how to read the market, volume profile, DOM, distribution theory, and all that. There's a very in-depth guide over here in all of these videos, so go check that out in our Discord community.tradeproacademy.com. Has some pretty decent trades today, actually. Long the 08's pretty much off the open. Long the 05 with a stop at 01. I'm still holding some. 2 trades, 2 longs. Good for about... First one, maybe like 15 handles or so. Second one, about 10-ish. How far would you let it drop before cutting your runners? Let's say it's a slow movement down. Realistically, my runners, I cut them based on profit or back down to my break even, right? Because if I'm long, let's say like 8, 9 micros, right? I'm only long 3 right now, so the majority is cut off. And if I see reactions like these, right, maybe I'll cut some off to diminish the risk. But I generally like to leave them running and leave my stops at break even. If they come back to hit my break even, that's fine. But it's not like all the moves that I find, all my moves, all my trades are expected to have a large reaction, large move. I'm expecting a large move from this because we're holding a smaller band of a distribution. There were some buyers today. We're very close to an all-time high. It's Friday leading into the holiday weekend. Why not end the week on a nice bullish note, right? But like there's a fine line between choking trades too tight and letting them run. Like, we're in a balanced day. I think it's very difficult to trail unless we start actually breaking back above that 20. So if you don't want the risk, you can honestly just cut them as is where they are, right? Yeah, I'll type in the Discord. Is there a DOM equivalent for options? The DOM equivalent, I wouldn't say for options. I would more so say like you can get like level 2 tape reading for stocks, right? Myself are the middle columns of the DOM. I have option to clear interval in seconds and checkbox for clear only touched prices. The cleared interval in seconds. Are you on? What are you on? Are you in Jigsaw? I have 3,500. I think 2,500 milliseconds or 3,500 milliseconds is a good number realistically to clear those out. The I think this 15, right? This is what we were watching for. 15-14 holds an offer here. They're looking like they want to sell a little more. I might cut one more here. Leave two runners out of this full position. Because right now you're seeing buyers are getting trapped. What's happening is you're seeing more of an offer. Two 300s coming in on the offer. They're looking sneaky, right? I don't like it. Cut some risk off. Leave the rest. Let's see if they offer this again. If not, right, let this thing fly. But what when they throw in bids like this, right, very close to price, and they actually trade them, right? They go market sell. It's not a good sign for the continued move to the upside. Yeah, like if you clear the only touched prices realistically, like if they trade, like right now, for example, you can see like 377 going in on the offer. We're down taking a little. Like they should that 377 at 14 quarter. If we trade it again, come on, don't make me look stupid here. Like if we trade it again, it starts a different number. It doesn't add to that 377. Like that's I assume that's what cleared data when touched means. Like yeah, so they trade it there again. Obviously 377 isn't there anymore because it lapsed past that 3500 millisecond time. No problem. I still obviously like the longs because I'm long, but we've traded in this 15 for like 7 billion years now. And the fact that they kind of sell it a little, they're getting a little stuck, I don't love. We have a lot of passive orders that are resting at 16. So if they actually trade those, they go market buy, there should be a pretty swift pop to the upside. Yeah, when they build up like several thousand, it's you can't differentiate realistically between what's real and what's not. If they're going to pull back from anywhere, it's going to be from here. If you have any other questions, nothing's really happening here. I feel like I've exhausted a lot of my resources. Looking for a buildup of a pullback from 15. That's about it. Might wrap this up here a little sooner. And if you have any questions, type them out. But I want to wish you all a happy holiday season. We're running into the long weekend, right? It's going to be Christmas on Monday, so I hope everyone who celebrates has a good Christmas, Happy New Year, happy holiday season, happy year, happy trading year. Hope that you've learned a lot, especially here at Trade Pro Academy throughout the year. We've dropped a lot of content. You guys can go and check all that out on YouTube, actually. And getting ready for a very, very good 2024. I think that 2024 is going to be filled with opportunities, not just on futures trading, but a lot in options, equities, right? There's a lot of potential out there. So, yeah, thank you all for supporting us, joining us. And I just wanted to say that I appreciate all of you and enjoy the holiday season, everyone. When I'm reading the chart, do you start with the TPO market structure and then DOM? And do you go through this process for every trade that you take? So, Craig, good question. I start with the volume profile, actually. I do volume profile mainly at the beginning of the session to get a very good understanding of where we are in the context of the market, the trading session, the overnight, what had transpired. And then generally, I have those levels laid out and ideas laid out, and I just stick to the DOM after that, how the DOM shapes up. So, like for today, if I was trying to buy 4808, right, I want to see how the DOM reacts around that area, if there's anyone buying, so I can buy with them. That's it. That's literally it. It's like, I tried to keep it very simple. I don't use many different charts. The DOM gives me all the information I need. But if I look at this chart, this is where I get my main data from. So for example, we have the big distribution that sits over here. This is the overnight session. If I'm looking at the data that I have right now, what's happening is we're escaping outside of the distribution to the upside, suggesting that there's bullish momentum. I find where the ledges are and where the thick volume is, so I can buy into those areas. So if we start moving above 08, that's the first area. There's a lot of thick volume that happens at the top of the overnight session, or any pullbacks maybe into the mid 90. So those are the levels that I have, and then I look at the DOM when we trade into those levels and see, okay, like, are there any buyers that are stepping in at market? Are there any big buildups of delta that are shaping up, right? What's the move here? And that's it, right? Seems simple, but those are the two main things. Good stuff. Yeah, of course. Why I did this, to answer your guys' questions. So I really appreciate you guys coming out and supporting and having the questions, so I'm not here talking to myself. Remember, we have that Discord, community.tradeproacademy.com. You can go and see the free side of things. There's also a member side, a private side on Discord as well, where we post trades, ideas, setups, education, so on and so forth. So this is it, right? I got 2 little baby lots running, probably the last real trade of the year. And other than that long, I'm still holding from yesterday on the minis, but that's it. I hope you guys enjoyed. I hope you guys liked it. A little shorter than yesterday's, but we'll do these a little more often probably, and we'll go from there. So thank you guys, and again, I want to say appreciate you guys and enjoy the holiday season. It's coming up, and markets are going to be slow. The futures trading room is going to be closed next week because it's nothingness. And remember, keep an eye out on these 15s. There seems to be some kind of offering. It's very, very slow right now, though. So yeah, that's all I wanted to leave off with. And thank you. I want to see in this.